All right, you guys, here we are, market open. It is February 17th, 9:33. It looks like we're getting a manipulation down here on the 5 minute. The market appears to be bearish, but we've got a lot of chop down here. We've come down to the 24,250-ish mark in the last, I don't know, 6 or 7 days here ago. And today we hit this 24,500 mark and just kind of bounced, and we've been doing that at that level for a while. So my idea here is that we head back for either relative equal highs above. I'd say around 24,800-ish. And I'm talking here while price is leaving. 24,700. I was looking for an entry, but it happened really fast. Sure, there will be another opportunity. But yeah, just kind of following along with what price action is doing. It is making higher highs. 24,800 was going to be the target, which was 24,850. Looks like the daily high of today. So we've got a huge rejection here at the bottom. By rejection, I mean price came down, and then at this point, these buyers who have been buying since October stepped in again. So there's huge buying pressure at 24,500. Psychologically, that's a nice round number. People like round numbers, so they get in. They get in at these round numbers. So right now it looks like we're heading to the upside. 24,825 ish would be a good target. 800, likely to have a reaction at 800. A lot of folks, again, psychologically like round numbers. So a lot of sellers, which stepped in before, may step in again at 24,800. Now, all indications right now are that the market is going to go higher today. So, what do you want to do? You want to wait for price to kind of take off. We've broken structure from the 8:30 news, it looks like. So we've broken that. So the idea here is, we made a higher high, a nice big run up. There really was an entry here that I missed while I was talking. Kind of mad at myself about that. Easy 2R there. Easy. So I would go with a 20 or a 30 point stop, 60 point take profit. So had I entered there, the 2R would have already been achieved. So here's 24,800. And like I said, 800 is a nice round number. So that was a price where a lot of sellers stepped in before. So now they have another opportunity. If they still see what they see, they're going to step in again and bring price back down. Now, in an uptrend, I wouldn't look for price to go any further than the previous swing high that was left behind. So that would be, back towards 700, and then continue. So if price is going to continue to go up like this, that would be my thought process on any shorts. So shorts for me are short-lived if the trend is up, and then longs are short-lived if the trend is down. It's my general line of thinking here. So you can see price is kind of just hovering, stuck here at 800. So here's the 15-minute. Back to the 1, see what the hourly is doing. Hourly just mitigated a fair value gap. And so, the target around 825 that's where relative equal highs are. We're likely to have some kind of reaction here. And the hourly is not able to make a lower low since it looks like Friday. Friday it made this low and has not been able to break that low and hold below. Okay, so that's around the 24,500 level. Now we're at 24,800, so we're 300 points from where it bounced. So again, like I was saying, at 800, it's a psychological level. Um, I don't have it marked as a high liquidity level, but in fact, it should be marked as a place where price is likely to turn around based on past performance. So here we have a huge move up and then an inside candle, and that's likely to keep going. So I missed the move. It would have been this. Luckily, I traded before market open. So I wanted a 30-point stop. So something like this would have been the move, right? Just easy, boom, and out. Um, Actually, probably would have just moved my stop to that 2R to see, where it takes us. 800 being, the logical final TP. Stuff just happens so fast at the open. Generally, if I'm not already in a trade at the open, I kind of skip the open and wait for things to settle down a little bit. Ideally, what we want to see here is price come back to this zone. Some people may do a fib retracement there, right, to the 50%. These days, I'm doing it a little differently. Looking at, where was price on the leg down instead of on the leg up. And I like for, price to come back into that zone. And even better if it goes down to like the 50% of that zone to keep going, right? So if your idea is going higher, then that's kind of what I want to see. Now, the angle of the EMA matters. We've got a nice steep angle at this point. And so any touch back into this zone, I'm looking for a play to continue. So again, look at what's happening at 800, right? Sellers are stepping in, right at 800. That would have been the final TP for me on this play at the open, right? It's easy distance to cover at the open. Not so easy during lunch or after hours. Asia, London moves a lot slower. The play would have taken a lot longer to move 60, 80 points like it did. So just kind of waiting around now just to see how this plays out. All right, so earlier, like I said, I would have moved my take profit to the 2R, right? So at this point, I'm securing that 2R. It didn't really go any higher. 800, like I said, would have been my final TP on this. So, at this point, I'm starting to look for signs of continuation to the upside. So if you follow my Discord and you have access to the paid portion, this is all in the lesson plan. This is very simple entry rules. Right now we've got most of them met. We're just kind of waiting to see now how do we enter. Where's our entry signal? in the course, I go over how to draw these levels, what indicators I'm using, and what the rules are for continuations or reversals. Get rid of this. And so at this point is where price kind of just took off to the upside. So again, I'm looking for some kind of signal that it's going to continue. Right now, we're not getting those signals, so we just wait. And again, a lot of people would have done this, like taken a fib retracement from here to here, and backwards. All right, and here we've hit the 50% mark. It's really hard to see an entry here, though, right? You got momentum back to the downside. Momentum up, momentum down. It's really hard to see. Okay, well, do I get in at 61.8? Do I get in at 50%? Do I get in at 79%? Down here, where price originally started to take off. It's hard to say, right? The momentum's down. We need an up signal in order to take a long here. So what I like to do is I like to see the last leg down and what that did, and then around the 50% mark, somewhere around here, potential entry. I don't like this downward momentum, so I wouldn't do that here. But the open could give us that retrace to grab some more energy from the buyers in this zone and then take us higher. However, that doesn't fit within the rules of the 2026 model. That's just me observing price action. What I've tried to focus on is just making this as easy as possible. Like all of that stuff I talked about just now, it took me years to figure out on my own. And it's not something that comes easily. And then there's risk, right? You have a bigger risk because the obvious liquidity is here. So we grabbed this liquidity and then took off to the upside, right? So there's kind of no reason for price to come back here because this liquidity is already taken before the upward move. So what I'm waiting on now is I'm observing, what is price doing and waiting for my entry signal. So it appears to have turned around here. I'm going to say this up move, get the 5-minute. This up move is now mitigated. So the body's here all the way up. If this next candle closes below, then we could possibly have a turnaround here. We had a fair value gap on the 5 that's been mitigated back the other direction. Still a ways to go though for that candle, about 2.5 minutes. But just price action wise, again, these are Heikin-Ashi candles, so they're smoothed down a little bit, so it's a little tricky to read these if you're not familiar with those. Maybe I'll do a video on how these work. But yeah, this is the place where price took off from, right? Buyers got very aggressive in this location, right? they grabbed liquidity and then took price the other direction. So we're seeing that buyers are stepping in again in this zone. Not getting an entry signal though for the model we're using this year. So you just kind of have to wait. Sometimes it happens after 10. Sometimes it doesn't happen within my window. My window is usually market open till 11. So market open took us to the downside and then took off to the upside 150 points. Now we're back down 150 points, maybe a little bit more. So just kind of waiting to see, what is the market going to give us here? So at market open, we immediately went for 700. And so the logic is that, in an uptrend at the market open, it reached for the psych level 700. The next obvious place is psych level 800, 750 if you want to be safe, and then 800. So TP1, TP2. All right, so we got our the 5 minute again. Yeah, very aggressive candles here. 5 minute price took off of the 24,500 bounce very aggressively here. So these buyers, if they're serious, are going to protect this area. That area is around 24,575-ish. What I like to do if I'm playing this kind of price action, just a price action play, if I'm still bullish, I'll take it, once it reaches this order block down here, which is the candle before price took off aggressively in the past. So the real manipulation at the open happened to the upside, now taking us lower, which is in agreement with the downtrend on the daily. The daily appears to be going for relative equal lows below around 400. I'm sorry, 24,400. All the way down to possibly 24,250 or 175 at the very lowest. So this was the lowest point in the last few months, and there's this range that we're in where it's just hitting the low, going towards the high, hitting the low, towards the high. So we're kind of just ranging in this, like, I don't know, 1,000-point range. And right now it's solidly to the downside. So the bias is actually to the downside. All right, we've got our market structure shift that has happened. And we're heading back towards 24,500, which was the low of the day in the London session. The high got smashed, and we're heading back for the low of the day. Didn't get the entry signal that I was looking for here. So on this turnaround, this candle here at 9:45-ish could have been, but it was too early, right? It's the first time the direction kind of changed with aggression, right? Displacement, but too early to say, yeah, it's going back down. So, we got a bounce here. Um, this candle gives a potential entry, but the risk reward is off. It's a big candle. And again, this is one of the risks of playing at the open is you're going to have larger stops. So for my 30-point stops or 40-point stops, this would have taken me out, right? Getting in on this candle would have taken me out on this reversal, right? So the next candle, not a great looking one for the purposes of the 2026 model. So just kind of have to be patient. You have to be patient and go in the direction of the market. Make sure that you're paying attention because it doesn't always follow the bias, the daily bias. Today it does seem to be doing that. So headed back towards that 24,500 again. Last time we got down here, it didn't actually make it to 24,500. Yeah, didn't quite make it. So at this point, we're going to observe and see what price is doing at 24,500, right? We finally made it back. So how's price going to react? This is a strong down move. So any play that I do right now would be a sell, right? To go to potentially 24,450, TP1, 400, TP2. Now, this is a strong move. You don't want to be first. I don't want to be first. I don't like to be first into a strong move. So I like to wait for a retrace so that I have two things. I have a confirmation that price sellers were aggressive at that location. So any sellers that want to get in or sellers that don't have a full position yet need to get some more. Right, price comes back, then I like to take a look at my options for entry to continue with the trend. And the obvious point would be to take it to the next swing low that gets formed. If you're looking at charts, you either look at the next swing low that gets formed as your target or a previous swing low that hasn't yet been mitigated. So somewhere around, let's say, 450. So again, 450 would have been TP1. We're likely to have a reaction there because there were some buyers in this location before, right? Aggressive buying, then more buying, right, to take price up. So there's some buyers. There was some aggressive buying here. This was generally agreed upon great price, I guess. So we're looking for when price gets back there, we may have some more buyers step in and try to get that low price again. All right, we're bouncing off 500 again. Let's see what this does. This is a clear momentum shift to the downside. We hit 800, and now we're down 300 points. So there's likely to be a pretty good bounce in the other direction to continue lower. So market, loves to consolidate, right, and then either continue or reverse. And then make a big move, and then another big move, and then consolidate, and then continue or reverse. Right now, continuation looks likely. We're likely also to just kind of bounce around here around the 500 level. You know, um, not all the time, but you'll see some kind of reaction at these major psych levels because they're again good places for people to load up, especially if they loaded up before and then price came back and they want some more of that low price. They'll buy. They'll continue to buy, right, and it'll drive price back towards the highs again. All right, we're below 500. Will we? Again, the possible entries on this didn't give me a lot of confidence because I would have been late on the move had I taken them. Now hindsight, yeah, 2020, yeah, I should have done it. But when you're in live markets, it's better not to do it if it doesn't fully fit your rules. Like you might look back and be like, probably should have jumped in on that. That's just fear and FOMO. Uh, don't give in to that because it has no place in trading. If you're giving into fear and you're afraid of missing out, that is a trap that will blow up a lot of accounts for you. Don't fall for it. Just be patient and wait for the setup to present itself. And if you have a good edge, like what I feel I have here, it's a very good edge, excuse me, then your edge will play out profitably in the long run, right? You're going to get an occasional loss here or there, but not as much as if you're just going off of fear and FOMO. You're going to have a lot of losses and big ones. And then if from fear and FOMO you escalate that into tilt, you're cooked, right? The market's just going to clap you. So yeah, the 500 level seems to be holding. Now again, we had an aggressive move down. We had a shallow retrace with more downside, right? We did a market structure shift on the 5 minute, right? So the idea here is that it's going to come back to around this zone where new liquidity was formed before more downside. So we have aggressive move up, aggressive move down, right? So balanced zone, as many buyers as there are sellers, right? Big move up, big move down, balanced. So theoretically, market doesn't need to come all the way up to this point in order to keep going further down. This shallow retrace created some liquidity. Some might call this a shallow retrace as well. On the 1 minute, I'll say right around this level, 675 ish is where price is likely to come back to. And then if it starts closing above that, right, then you've mitigated all of this down move, right? And you've got another market structure shift in the other direction. That's the danger of being on the very low time frame, is that these market structure shifts happen very often. And if it happens a lot, generally on the low time frames, you can't trust it as much as it happens on a higher time frame. On a higher time frame, you're going to see a lot more respect of these levels than you will on a 1 minute, right? So market structure shift on the 15 minute is much more powerful, exponentially more powerful than a market structure shift on the 1 minute. All right, so we've got a strong downtrend here. where we're making lower lows and lower highs. So here we have our first like actual retrace. What I would like to see is for price to come back, to this zone and hit this liquidity that was left behind. All right, so we'll see how this plays out. All right, so this could give us a potential entry here as we approach this swing low that was left behind. So again, you want to wait for that confirmation. If you don't get it, don't trade. It's just that easy, and that is easy. If you don't see your setup, don't trade. If you do trade when you're not seeing your setup on the screen, then you're trading out of fear, FOMO, or boredom. Like you feel like you should be in a trade. You have to trade today. You don't have to trade today. You don't. You don't have to trade any day. All right. So the idea here is this. We're going to watch this candle, see how it closes. If it gives us that close that we need, it will look something like this. And we're looking for this swing low to get hit for 2R. Yeah, this is it's an iffy candle. So it is looking to go to say 450-ish, all the way down to 400. Let's see what 4R looks like. Yeah, so something like that. This next candle will give us our entry. I'll just go ahead and take that. All right, I'm going to go ahead and take that.
Order filled.
Now, as price approaches the 2R, I would secure that. This is about a 30-point stop. Let's go ahead and change that because the entry is not exactly giving me those 30 points. And now we just wait. We just wait for the market to give us our 2R. It should be about 60 or so points. So again, why are we entering here? Well, the market is clearly in a downtrend. We're going with that trend, which you should always do, which is what I always do, um, or try to do. If I do end up going against the trend, it's short-lived, right? It's a shorter trade. I'm not looking for a home run on a reversal. I've lost a lot of accounts. I won't care to mention how many, but it's a lot of accounts chasing, bottom ticks or top ticks, right? It's a big move if it does reverse, but you're not going to get that very often. So you have to be comfortable with losing. I'm not comfortable with losing that much. So that's why this strategy exists. It's just a little bit more win rate. And these days, I'm in the habit of not moving my stop. If the situation looks like it's hairy, like we're chopping really bad, then I might move to break even just to avoid that loss. But what I found is if I start moving or messing around with my stops, and sometimes price will hit my stop and then hit my take profit and keep going like 3, 4, 5R. And watching that sucks more than losing, I think, in my opinion. Watching price hit your stop and then not work, the trade not work out is acceptable for me. Watching the trade hit my stop after I moved to break even and then hit my TP in like times 3, 4, 5x, that is hard. That's hard to watch. That's not a good feeling. So again, the idea here is that we're going to go for this newest swing low that was put in before, with the potential to go all the way down to around 400. So that final TP is 400 to 4, in this case 413, based on my stop. I'd love to go for 4R. So we're at 1R at this point. So just kind of waiting for us to go to that 2R to go ahead and secure that. 2R is somewhere around here. Yeah, so really right at this low is where the 2R is. Just drop some nuggets here. You notice price action in general. We usually have a run and then come back and then have another run. That's smooth price action, at its most basic. So you'll make a big move, then you'll retrace some, usually, and then continue. So price rarely just goes straight up in one direction, straight down in another. That's kind of rare, and trying to catch that is hard as hell. Not gonna lie, it's hard as fuck. So I've gotten away from trying to catch those kind of moves and just going for my 2R. The 2R win rate for this strategy is very high. Um, in terms of trading, most edges, if you've got like a 51% edge, so 49% of the time you lose, 51% of the time you win. That's a winning strategy in trading. So when you start talking about 70+% win rate, like I get with this strategy, then you are talking about game changing. That's a game changing win rate. Like it just changes exponentially how fast your accounts can grow. And if you can do 70% with 2R, there's absolutely No fucking way that you should lose money. You're doing it wrong. You're doing it wrong if you have a strategy that's 70% plus win rate with a 2R and you're losing money. I'm just gonna hurt some people's feelings by saying this, but I don't care. You're just doing it wrong. It doesn't matter. It doesn't matter what I say or what anyone else says. You're going to continue to lose until you start following the directions of your edge to the letter. So again, if the opportunity is there, take it, but make sure that the opportunity is there. Not don't imagine that the opportunity is there. Make sure that it is there. Have your checklist. If it meets all the points on your checklist, get in. Don't move your stop loss. Do not move your stop loss. It might go into profit 99% of the way to your take profit, and that's okay. Like sometimes it'll bounce back, and at that point, yeah, maybe move your target to break even so you don't lose on that trade. But one of the things I like to do is, as price is approaching that final TP for 2R, and especially if it gets beyond that point, I go ahead and secure that 2R. That 2R is the key, right? So you could lose 2 trades for every 1 trade that you win. Now going for a 3R, a lot of strategies out there will say, yeah, I'll go for 3R. Make sure you always get 3R, right? While in theory that sounds good, 3R in the market is a different beast. It's something else. It does not happen very often. It's something like 10 to 20% of the time on NQ, which is my preferred asset. And that means 80% of the time you're going to be losing. And for me, in my psychology, that doesn't work. I don't like that. I don't like losing that much. I'll take a loss if it fits within my parameters. Then that's a win. If I followed all the rules and I lost, that's a win in my book. So here we go. You're out.
Stop filled.
Now we wait. So I'm going to be waiting here at this point to see what the market's going to be doing here. Again, 24,500 was a major psych level that a lot of buyers had stepped in the past. So, and I don't like to call these support and resistance levels. That's, in my opinion, inaccurate. It's a level where a lot of buyers and sellers transact. So price could go either way from these high liquidity points. But in this case, making these lows like this, um, it's going with the trend. And if you go with the trend, it's your friend and it's going to go your way more likely than it's not. All right, we have a downward move, higher low. Did we make a higher high? No, not yet. So this is not reversed. Right now, the criteria for the trade is not looking like it is met yet, but we're getting there. Let's adjust my settings here so we get it in real time. ATR is 40, so we need to have a 40-point stop in this case. All right, we swept a high. Where is this going? In this case, it didn't quite reach our target. I generally don't secure 1R, so this is fine. I followed my rules, and like I was saying earlier, when you follow your rules, that's a win. So changing your mindset on how you feel about losing when you followed your rules really does help with accepting the loss. So remember I was saying earlier how we had this move down, this shallow retrace, and then a continuation. So at this zone is where I expect to see, a price reaction as well. So somewhere around 650 again. So today I was expecting big ranges, and it is a little trickier when you're trading big ranges because the momentum carries it for such a long while. So it takes a little longer for your setups to form. Particularly this setup might take a little bit longer to form. But there's liquidity right here, right around 660-ish, where I see a potential for price to come back down. Why is that? Again, we have our last leg up. So if we look at that last leg up, there's some liquidity right here. So I'd be looking for this to hit that liquidity in order to go in the other direction. We're kind of in that range right now. We've mitigated this last leg up on the way back. So I'm really looking for this to continue in the other direction. Right, so again, on the 5 minute, we had this market structure shift, and then we actually mitigated this fair value gap. So on the 5 minute, it's looking like it wants to continue down further. The 1 minute, I'm looking for it to give me my entry. Let's go down a time frame. 30 seconds. I'm just checking the higher time frames, see what's going on there. So again, the 5 minute is giving us it's sort of a retrace and entry signal. Let me turn on my timer. I have about 2 minutes here. It's hitting 250. So again, I still like downside here. So let's go ahead and do that. See where this candle's taking us. I do like downside if it gets below here. So instead of just getting in market order right now,
Order submitted.
I'm waiting for that to kind of confirm and reach down and tap me in rather than just get in now and have it go the wrong way.
Order filled.
ATR has calmed down a little bit.
Order filled.
So again, I'm looking for it to hit these relative equal lows here around 450 as a final take profit. All right, so this low that was put in a little while ago, we got the 15. Let's see what that gives us. All right, that low is mitigated. This low around 430 would be final take profit. So let's set that at 450 because I do expect a reaction right around that point. So that's going to give us a little more than 2R based on this risk reward. Now this entry is based off of the 5 minute. The 5 minute is giving us that signal to enter. Right? Huge move up, very aggressive move back down. Taking back most of that profit. So I'm looking for this to continue and take us back towards 500. In this case, 500 would be just about that 2R. Let's see, I'm doing a 20-point stop. So 48 to 08 would be a 2R. So right around 500, I'm looking to secure the 2R. And again, I'm not in the habit of moving my stop. I'm going to go with the flow, which is down, and back towards liquidity around 500, right? Lots of price action in this area. So a lot of orders, both buy and sell right here. So that's where the liquidity lies. So at around 40 points or so is where I want to take profit or secure my take profit. So I'll get ready to do that. That's going to be around 0850. And I'm anticipating that this is going to take us even lower. I think it's coming back down to grab some more price action around the 500 zone. We get past this point, I'm securing and then just waiting to see what it does, and I'll kind of try to trace it down with the price action. Not really worried about this retrace here. Because if it is going to go down with my bias, which is down, then I do expect it to trap some buyers. Right? So if buyers think it's reversing here, then they're going to buy, and then they're going to get trapped, and then they're going to sell. They're going to sell to get out, and that's what I'm banking on. So when they sell to get out, it's going to drive price even further down. Right, and there's a lot of traders right now looking at this as, oh, we got a fair value gap here. Price came out. Let's take it back up. Right, everyone can see that. Everyone does ICT these days, or has some awareness of ICT concepts. So I believe at this point now, ICT's been doing this long enough where traders know, professional traders know how to use this stuff to set people up and trap them. Right, so everyone's looking for a reversal here. They start buying. They're going to take these prices and take price lower. That's what I would do. So that's kind of what I'm banking on. Just do the opposite of what all of retail is doing. That's how the pros make most of their money. They see where the obvious entries are, and they look for some cheap liquidity, cheap prices in their direction against retail. Here we go. I failed to secure here at this point because it bounced kind of fast. But again, I'm not really worried about it. Um, I think we're going to go beyond 2R. When you watch price action long enough, um, you see that we start noticing that wherever price opens on a candle, it'll generally come back there once to maybe three times before generally picking a direction. Right, so it'll take off in one direction, come back to where it opened again, take off again in another direction or the same direction again, and then come back to that place where it opened again. And it might do that two, three, four times or more before generally going in the direction that it's going to go. So I don't know if you guys noticed that on this candle, right? It opened, went up, down, back to the open several times before continuing in the direction that we wanted it to go. All right, so I'm going to go ahead and secure the 2R now. And then just wait. Like from here, if it keeps going, great. If not, boom, 2R. So we had
Stop
a
filled.
loss and a win. So 1R loss, 2R win. We are up on the day. We're up 1R on the day for this trading session. Fortunately for me, I was already up 4R on the day earlier, so I'm up 5R on the day with that trade. So hopefully this helps you guys a little bit to kind of see my thought process. Again, my thought process on this trade was my main goal is to capture 2R. If it goes beyond, perfect, follow it, go down with it, trace it a little bit further down. On this particular trade, the entry was on this reversal here. So we had a change of character and then immediately back in that same direction. So on the 5 minute, we have a retrace with a strong reaction around 450 or 650, a major psych level. And on this candle to the downside is where I got in. And then I was looking for lows in this area around 450 or so. And that's where it's going. I mean, could I have held on a little longer? I didn't want to because I had that loss. If I didn't have that loss right before that, then yeah, I would have held on a little bit longer because then I'd still be up, the 4R on the day plus whatever this gives me. But because of the 1R loss, I was up 3R on the day, and this gave me an extra 2R, so I'm up 5R on the day total, even with that one loss. And that's the power of this strategy. It's laid out in the members area for you guys. So if you have any questions or doubts, make sure you take that training that's available for the members in WAP. And if you have any other questions, let me know in the chat for my Discord. All right, see you guys.